Okay. So what is the overall returns that we are getting?
I have gone aggressively in Parag Parekh Mutual Fund, which is a good fund house, but that tax saver fund is just 3 years old. And AUM is also 600, 700
We
crores.
have, I will be giving you a list of this one, right? In that we have one of the Parag Parekh. Okay. I'll send you. Okay. So now that you know how to compare, see this one is a tax saver. Okay. So 3 years is 24%. This is good. 5 years. It has been only for 5 years, I think so. 5 years or 6 years. Okay. Yeah. When did it start? Launch is 2015. 7 years now. Almost 7 years. Correct. Okay. Almost 7 years. And returns are pretty decent. Okay. Returns are pretty good. Okay. Peers. Let's go to the peer comparison. Okay. So
So when we are doing peer comparison, should we see 5-year period or we should see a lesser
maximum
period?
3, 5, 7, 10. Okay. Start with 3 years.
Okay.
Start with 3 years comparison and then keep on increasing 3, 5, 7 years because you're going to hold it for longer period of time. Okay. When you're even going for ELS, right? Don't think or restrict yourself for 3 years. Okay. See for 6, 7 or 10 years like that, because that is when you can expect good return. See here. I think this seems to be a very good one. All these are ELSS. Okay, you can compare all these things. You can start analyzing all these things. Compare the 3, 5, and 7 and 10 years. Okay, and see for yourself all the. Okay, see here, this is 6 years, 6 years, 8 months, 9 years, 9 years, 9 years. Good. Okay, compare all these things, and you can get a very good idea about which one is good.
Should AUM be a factor while choosing the funds?
Asset under management is like how many people, not required, not much. Okay. If it is huge, it's good because it means that so many people have invested, okay, in that particular mutual fund. Correct. AUM is what? Asset under management. Okay.
Yes.
So many people actually putting it on a particular fund. It means that the asset under management will be high. Okay. If it is very, very high, it is good. It means that so much of attraction is there. Okay. So many people prefer that. Okay. If it is very, very less, then get out of it. Don't get into it if it is too less. Okay.
And what should be the threshold for that minimum AUM?
A lot of mutual funds have minimum of.
It should be 3,000 crore, 1,000 crore.
On average. Let me see. See here. You can see the industry. Based on the industry, it varies. See here, ELSS. This is net asset is what? 10,000, 13,000. This is good. Why? Why is this good?
It is showing more people are trusting.
In 6 years, 8 months, it is having 13,000. In 9 years, it is having 10,000. You will understand this. And this is something I won't prefer. Okay. Or even if I prefer, I will be putting very, very less amount, because even after having been in the industry for 10 years, why is that the capital asset AUM is not increased? Okay. Why is that these are increasing drastically? And this is actually growing very, very, very fast basis. Okay. So based on the comparison, you can do it. What is low, what is high? Okay. So now every mutual fund is going to have some good amount of crores, 3,000, 5,000. But here, comparing this one, we feel this is good, right? So that also need to be checked. Peer comparison. Do the AUM. When you're doing that, compare with the peers and decide which one to go for.
Okay, so we should not do a comparison on basis of ranking. I was doing that on basis of ranking.
Ranking, I don't suggest. Okay. See, ranking will be, see, sector wise, this is good. Okay. Returns wise, this is good. Risk wise, that is good. A lot of things will be there. Okay. But prefer like this. net asset, total assets, okay, is a good way to actually compare. Returns will be comparing, expense ratio will be comparing, okay, peers, what is that, net asset you will be comparing, and then what is that, stocks, which all stocks that you're going to analyze on the portfolio, okay, which is going to help you give better idea. If you're doing that itself, your confidence on each of the mutual funds is going to be very, very high. Okay, that's good enough. Yeah, so ELSS is a good thing, guys. Everyone who's actually want to save some particular ATC, under ATC, right? Go for ELSS, best one. Understand this. ELSS is giving you, say, 15%. Okay, so 15% average. Okay, and 1.5 lakhs on that 20% you are saving as tax per year. Okay, 1.5 lakhs you are saving tax per year. So your savings is not just that, what to say, 20% of 1.5 lakh. Okay, 20% on that is save, and that 1.5 lakh is again giving you some 15% here. I was able to understand. The 1.5 lakh that on which you are saving the tax, okay, as part of ELSS. So 20% you are saving the tax, and then the same 1.5 lakh you are putting in ELSS and making some 15%. Okay, so that way your profit is very, very high. Okay, almost like 20 to 25% profit, because lock-in is there. So 1.5 lakh can be used for only for once, right, in the taxable year. Okay, so almost like 20+% can be used. So 15%, 20% by 3, 7.5%. 15 plus 7.5, 22.5% approximately on average you can actually, you are making per year by investing in ELSS. Okay.
In my mindset, I am leaving it for as good as PPF. Like I will not break these funds for 15 years.
See, as long as it is giving you returns, why do you want to break it? Okay, you don't have to break it as long as giving you returns. Okay.